On the 7th of August, 2026, Grayscale Investments quietly pulled the plug on 3 highly anticipated altcoin ETFs. In a window of just 190 seconds, the asset manager submitted Form RW to the SEC, withdrawing spot ETF filings for Cardano, Polkadot, and Hedera. This happened 2 days before Cardano's ETF eligibility date, which was supposed to be a milestone moment. But the real shock is the price backdrop. Year to date, ADA has already collapsed 41%. DOT is nursing a 54% loss, and Hbar has shed 35%. This was not an SEC rejection. Grayscale chose to walk away, and that deliberate silence, on the morning of Monday the 10th of August, is what demands our analysis today. To understand this move, we need to look beneath the surface. Grayscale's forms were pulled shortly after the associated exchange proposals from NYSE Arca were also withdrawn. Without a live exchange listing vehicle, the ETF registration statements were dead weight. The firm called it an administrative pipeline cleanup. But the timing suggests more. Regulatory ambiguity still hangs over whether altcoins like ADA, DOT, and Hbar qualify as securities. Informal SEC feedback may have signaled a slim chance of near-term approval. Grayscale likely concluded that throwing resources at these filings, while Bitcoin and Ethereum products hog the spotlight, was bad business. This is not the regulatory victory many hoped for on Cardano's eligibility date. It is a tactical retreat, and it mirrors a broader sense that altcoin ETFs are stuck at the back of the queue. The impact on sentiment is immediate, even if the withdrawals were expected by insiders. On this Monday, Bitcoin is holding around $65,000, providing a shaky floor for the market. But altcoins have bled far more severely. ADA's 41% year-to-date erosion means that Grayscale's retreat is another layer of uncertainty for holders who are already underwater. We have seen no follow-up filings from competing issuers for these exact assets, which tells you that institutional interest is cooling fast. The KuCoin and Binance Square communities have reacted with a mix of cynicism and hope, but the on-chain data doesn't lie. Trading volumes for DOT and Hbar are thinning, and the withdrawal of an ETF narrative removes a key catalyst that bulls were counting on. Right now, these tokens are searching for a new reason to rally. Looking ahead, the near-term outlook is cautious. Grayscale's move will likely deter other fund managers from filing for similar products until the regulatory fog clears. The Cardano ETF eligibility date has come and gone without any viable issuer, which means the market must look to other catalysts, perhaps the upcoming network upgrades of Cardano or smart contract adoption on Hedera. But ETF-driven hype is off the table for now. We could see these altcoins drift lower or consolidate in a range as speculative capital rotates back to Bitcoin. If the SEC eventually clarifies that proof-of-stake tokens are not securities, we might see refilings. Until then, the 190-second withdrawal serves as a clear signal. The ETF door is not open for all, and the market must accept that patience, not hope, will drive the next leg. Here is the honest conclusion. Grayscale's withdrawal is not a market crash, and it is not a ban. But it is a powerful reality check. When a 13-year-old crypto asset manager quietly scraps 3 ETF plans in minutes, it tells you that the path for altcoin financial products is far more complicated than the Bitcoin ETF success story suggested. For anyone holding Cardano, Polkadot, or Hedera, this event is a reminder to base your decisions on technology adoption and network growth, not on the promise of an ETF miracle. In crypto, very often the absence of news is the most telling signal of all. Thank you for watching, and stay sharp out there.